Hey guys, welcome back to our YouTube channel Accounts Guru Cool. Learn accounting online. So today we are here to discuss about zero balance account. What is it? So few viewers called me and they mentioned that they need to do the reconciliations and where the bank balance is going to be says the zero and the closing balance as well that's going to be zero, then how we have to perform that reconciliations. And whenever we heard the name about the bank reconciliations, we always knows that there should be some opening balance in the bank, or if we open the bank account, then that's going to be deposit some amount, and over the period of the transactions, and whenever you are going to do the reconciliations, then you are able to have some opening balances over there in the bank. And you have to do the reconciliations for that. One is going to be the bank statement, and another is ledgers, what we have in the systems. And we have to perform the reconciliation to ensure the balance is going to be matched. And if it's not, there should be some reconciling items is going to be there. But now, when the concept is there as a zero balance account, then how the account is going to be work, and how the balance is always going to be zero, and what we need to do for that, what's going to be benefit for us, that's all we are going to discuss here. So we are going to discuss the one thing is about what is a zero balance account. Second, how does a zero balance account work? What are the benefits of maintaining a zero balance account? And what are the disadvantage of zero balance accounts? That's all we are going to discuss here. So request viewers to be with us till the end of this, and request viewers to like, share, and subscribe our channel to get a more practical knowledge related to accounting and finance. In addition to that, if you are looking for any sort of training related to P2P, O2C, FP&A, R2R, or if any software related training, or if you're looking to outsource any sort of work related to accounting and finance, then you can connect with us on our email ID accounts.gurukul@yahoo.com or finance@tivedeeperllp.in. So we'll discuss here what's mean by zero balance account and how that's going to be work. What are all the benefits and disadvantage we have for that account? So that's all we are going to discuss here. Now, what is a zero balance account? So the concept of the zero balance account is just that a business checking account that maintains a zero balance at the end of the each day. When the business needs money, the exact amount moves from a connected parent account into the zero balance account. So what is a zero balance account and how the concept is going to be work? So the business checking account that maintains a zero balance at the end of the each day. So that's going to be, so how that's going to be work, that we need to discuss here. So that the business checking account is going to maintain a zero balance for each day, and whenever business needs some money, that exact amount moves from a connected parent account into the zero balance account. So the all the money is going to be there in the parent account, and the checking account, wherever the money is going to be need, that money is going to be move out from the parent account to zero balance account, whatever the exact amount going to be required. So that transition is going to be there, and the entry is going to be there from the parent account to your checking business checking account. The fund is going to be moved from your parent account to business checking account. Business may use the funds to cover expense such as payroll, PT cash, and different department needs. If any funds are left in the account at the end of the day, they are swept back into the main account where the money can earn interest, often at a more favorable rate. So the business checking account is going to be there with the zero balance at the end of the each day, as and when the cash is going to be required. So that much amount is going to be transferred from the parent account to zero balance account. By end of the day, whatever the fund we used, and if any fund is left over there, that's automatically going to sweep back to into the parent account to earn the more interest as compared to the business checking account. Zero balance accounts are sometimes referred to as a subsidiary accounts, though not all subsidiary accounts are zero balance accounts. In continuation to do, how does the zero balance account work? In many cases, zero balance accounts can help business owners better track their financial to prevent auditing, disasters, and avoid the fraud. So that's going to be the benefits, how that's going to be help to the business. The zero balance account may even reduce cost by automating transfers, moving idle funds into interest bearing accounts and protecting against overdrafts, allowing you to focus on the developing and running your business while your money works for you. So the how does the zero balance account is going to be work? So whatever the balance is going to be there, that's going to be transferred towards the zero balance account. And once the fund is available, that's going back into the your main account. And by doing all these things, you are able to do the better tracking of your accounts. And from the main account, you're able to get the more interest on that. For a zero balance account system to work, you must first have a main parent account where all your money is centralized. So this concept is going to be how the centralized account, and in the centralized account, all the money is going to be come. From there, a zero balance would be a child or offspring account where money flows down for payments and up for receivables or deposits. A business may have multiple zero balance accounts and even different tiers of the account. So how does a zero balance account is going to be work? So first you have to maintain a parent account where all your money is going to be centralized. And from there, the money is going to be moved towards your zero balance account or child account from the parent account. And if the money flows down, that's going to be transferred from your parent account to child account for the payment. And as and when there is a receivables or deposit in your zero balance account, your child account, that's going to transfer up towards your parent account. And a business may have multiple zero balance accounts and even different tiers of the accounts. Once a check are presented against the zero balance account, the bank automatically debits the main account and moves the fund into the zero balance account so you don't have to monitor and make those transactions yourself. Conversely, when deposits are made into the zero balance account, the bank automatically moves them back into the parent. So at the end of the day, you are monitoring all the money at a centralized way, at a one bank, that's a parent bank. And whenever you are going to deposit any check in zero balance account, the automatically that fund is going to move from your parent account to zero balance account. And if you have any deposit in your zero balance account and that's the excess fund is there, then that's going to be automatically moves them back into your parent account. How does a zero balance account work? That's what we are discussing here. Now, what are the benefits maintaining a zero balance account? Here are some of the here are some of the benefits of using zero balance accounts for business accounting. And the first is going to centralize cash with flexibility. Keeping the bulk of your funds in a primary account and maintaining several zero balance accounts optimizes your cash flow. Instead of keeping the cash idle, you can move the money into different child accounts when you want to invest or take advantage of other opportunities. So centralize cash with flexibility. Keeping the bulk of your funds in a primary account and maintaining several zero balance optimize your cash flow. Instead of keeping the cash idle, you can move the money into different child accounts when you want to invest or take advantage of other opportunities. So that's going to be how the great benefit, knowing you have the centralized cash with flexibility. So all the cash is going to be available into the primary account. And when it's there, then you are able to monitor the cash flow and able to take the decisions about that what's the fund is available. If you want to do the investments anywhere, then you have the scope to do for that. Second is going to be easier budget management. Depending on the size and complexity of your business, multiple accounts are often necessary and can become difficult to manage. A zero balance account allows you to have an area of dedicated accounts that's well organized and streamlined. So that's going to be how the complexity is as well if you have the multiple accounts. And instead of that, if you're monitoring everything into the parent account, then that's going to be the beneficial for the organizations. Next is going to limited errors. An automated system that moves money from the parent account into the zero balance account helps eliminate clerical errors. It also reduces the amount of time spent on each transaction. So there is no need to do any manual intervention here when the instruction is there to the bank, to the parent account and zero balance account, that everything is going to be work automatically and there is no need to do any manual intervention. So it's a limited errors. Increase visibility and awareness. When funds are moving cleanly in and out of zero balance account, it's often easier to internally track and audit spending, particularly overspending, and you can more easily assess your daily overall cash positions. That's going to be how the increased visibility and awareness. When we have the centralized bank, then we are able to do the track of the spending. Reduced fraud risk. The use of zero balance account makes it simpler to protect a larger main account against the fraud and theft. If you have the too many account, then that's going to be how scope for the fraud and risk. But if you have the one account, then that's going to be helpful for you to maintain in a proper way. Next is going to be overdraft protections. You will never incur a fee for having insufficient funds to process a transaction because the bank will automatically pull the exact amount you need from the main account and direct it to the zero balance account. Next is going to be pre-approved debit card transactions. When a company issues debit cards to its employee and connects the cards to a zero balance account, each transaction is pre-approved and creates a cleaner line of communications and flow. So that's going to be pre-approved debit card transactions. Now, although the zero balance account provides many advantages, there are some drawbacks to consider. So what are the disadvantages of a zero balance account? Limited control. Zero balance accounts are heavily automated and moving money in and out manually isn't easy. In fact, it defeats the main purpose of the zero balance account. So that's going to be have the limited control over there. Reconciliations is still required. Your business will still need to track and regularly reconcile every streamlined zero balance account transaction. So that's the reason you have to do the reconciliations of zero balance account. Potentially more work. If a transaction fails, it may create multiple additional transactions. This creates more work on monitoring on your end. That's the reason you have to do the reconciliations and your balance is always going to be opening balance is zero when you are doing the reconciliations. Second is going to be structure is needed. Having multiple accounts may become complicated, so you will need to implement a structure and an administrative process that keeps everything straight for your business. So that's also is going to be the disadvantage of the zero balance account as a structure is needed. So that's all from this zero balance account. What is it? And yes, you have to perform the reconciliations and where your balance is going to be zero, and you have to still do the reconciliations for that. So we have discussed here what is a zero balance account, how does the zero balance account work, and what are the benefits of maintaining a zero balance account. What are the disadvantage of zero balance accounts? Thanks guys for being with us and request viewers to like, share and subscribe our channel to get a more insight related to accounting and finance. In addition to that, if you want to connect with us for any sort of training or looking for any consultants related to accounting and finance, you can connect with us on our email ID accounts.gurukul@yahoo.com or finance@tayudiparllp.in. Thank you.